Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And the Qs are having a rough time, down 34%. So we're going to look at six kind of major stocks, certain buy levels, when we should get in, when we should hold, and if they're investable now and how to get the best price.
All right. I love the idea. If you guys enjoy this kind of entertaining stock market content of two stupid guys trading stocks and talking all things personal finance, give us a little like and subscribe below. We'd love to have you along this little adventure of ours. With that, we'll get to it.
Two Stupid Guys Trade Stocks. So, how we're going to do this is we're going to look at Apple, Google, Meta, Microsoft, AMD, Nvidia. Okay? Now, the Qs, they're down 34%. In fact, I could pull that up right now. They're down quite a bit, all right? 34% is definitely nothing to laugh at. We're trying to see, using levels from previous times, usually around pre-COVID, if the stock is worth buying now or if we should hold, and where these levels are in relation to historical PE, all right?
Okay.
So just off the bat, I have the Qs up here, currently chilling around 275, all right? The major resistance we actually have not beat yet, okay? So red is going to be the next resistance up. Yellow is what I call my dream level. That's where I just really want to buy the stock, okay?
So
but I don't know if it's
pre-COVID
going to
peak.
get there. Yeah, pre-COVID peak, chilling around 238. Between 259, 269, we have some pretty hefty resistance. I think it may take some time to beat if we're going to go there. Let's take a look at Apple first. Does this chart look like the Qs to you?
No. This is something that's dramatically outperformed the index in which it's listed.
It's killing it. It's just, God, it's frustrating, to be honest. So we're chilling at 150, all right? At 150, Apple's PE, obviously this will change as earnings season comes out, but it's chilling at 25, okay?
Okay.
This red level, 138, is the next resistance and a very, I would say, easy price to get down to, okay?
Okay.
That's going to be chilling at 22 for the PE, and this yellow level is a 21 PE. Now we're going to look at Vinny's graph, okay?
Yeah. So this is macro trends, and you can actually look at historical PE ratios for Apple. So you're looking at it over time. It was hanging out in like the mid to low teens. This is back when I bought it, pretty sexy. It's been done very well for me. But all of a sudden it broke out in 2020, started hitting a PE of 20, accelerated all the way to a PE of the mid 30s. And now it's kind of pulled back a little bit to 25, but we're still well above where it was for like the several years before this, 5-year like trend line there. I think based on when Warren Buffett's been buying, to him, a buy of Apple is any stock price below 140. So you're looking at like, kind of in that range where you have that PE of 22. So if Apple could get to like a PE of 20, that's probably a pretty good buy price, at least in my personal opinion.
That would be that yellow, 128, and that average 15 to 16 are all the way down here.
Yeah, exactly.
That's
it's still
pretty
well
far.
above historical averages. But people have realized what company Apple is at this point. People forgot, didn't realize what it was before that.
Fair. Google. So these blue levels are levels that I had up already. They were levels that were fairly strong resistance at the time. You can see, we're zoomed out all the way to 2019 to encompass all of these levels. So you can see the COVID dip. You can see we bounce off this 105 level multiple times. We are now chilling right below the 99 level, okay? Google, at the current rate, is at a PE of 18.6. This red level down here is a PE of 16, okay? That's another $13. Let's look at Vinny's chart here.
So Google is actually in very kind of low territory regarding its recent like PE experience. They've had a dramatic acceleration in their earnings, which may or may not be sustainable. You're talking about a downward economic cycle, probably looking at like a 30% haircut in terms of earnings. Google will probably still grow in terms of revenue, though, because they have such a dominant market position. It is a stock that I'm actively buying at this particular point in time. But when you look at the historical valuation, your mid 20s, kind of PE seems pretty reasonable for Google. And right now we're chilling at 18.6. We're below where they've been for quite a while in terms of their PE ratio, except given the fact that they have very elevated earnings, though.
So if we drop another $13, which I do think is possible in Google, because we have not dropped a significant amount compared to other companies, we're going to be looking at a PE of 16. That is one sexy buy.
I know. This, I think, is shaping up to be a opportunity to accumulate a company that is utterly fantastic long-term fundamentals at a fair price.
Agreed. Let's look at Meta, because this one's crazy. All right? Meta, we were chilling up here at like $380. Okay? Now, we are currently at about 140. This is still red because we bounced off it. We haven't quite hit below it. Look at how these levels are perfectly respected. Look at this. This is the COVID low we're chilling at right now. Okay?
Yeah.
COVID low. We are currently at a PE of about 11.8 to 12. All right? That's disgusting. Now, we got to look at fundamentals. You can't just go by PE. There's other things you have to evaluate, right? But if we can get down to this yellow level, which I literally have to zoom so far out to where that is. I didn't do it for this doc because that ruins all the other charts because we haven't been there in so long. That PE is 10. All right? Let's look at the history here.
So Meta actually has quite a significant headwinds, right? I'm a Meta shareholder. You have the real question about whether or not I think Reality Labs is going to work out. You also have some real question about the IDFA changes with Apple. However, and we're going into a bear market cycle where ad spending will probably go down for many businesses. However, the finances here are extraordinarily discounted, and I think, in my personal opinion, as a stupid guy on the internet, that it represents a fair discount for the risks that you're taking on here. You're talking about a company that chilled in the mid 20s for PE for the last 5 years or so, and now they're trading at a PE of 11. Granted, they did have some decent earnings throughout the whole pandemic, and they've seen that cool off a little bit here. News story came out this week that they're trying to trim their cost by 10%. So they are trying to manage that, and get their earnings back up by managing costs. But you are looking at a historically low valuation metric at this particular point in time.
Man, that is one attractive buy. 120 for Facebook, huh? That's crazy. Yeah. All right, Microsoft. So we're chilling at 238. That is a current PE of about 26.12. This red level here, I do think this is gettable. Okay, this is 225. This yellow level, it's kind of a range. It's a very strong level at about 195, but it's really like a 193 to 200 level. It's about COVID peak before it happened, and then as you can see, we had a lot of strength around this level as it dipped back down. That PE is going to be 20. The red is 23. All right.
Okay. So Microsoft for a long time was chilling out here with a really, really low PE around 10. They've gotten repriced now that they moved to this more, instead of one-time off software sales, into this kind of realm of selling, recurring revenue. PE got rather elevated up here. You're talking about a 40 PE. They've come back down to reality a little bit, but still well above where they were in that previous period. In this new time period, you're probably looking at something in the realm of a PE of 20 being a very attractive entry point.
So that red level, Microsoft 120?
Yeah.
All right. Let's look at AMD's going to be a little different here because they weren't profitable for a while, so their PE graph is going to look kind of shitty. Now remember, they were chilling up here at 180, all right? They're all the way down to 67. Look at that haircut, man. They broke this 72 level just recently. Now, I didn't even calculate the PE for my dream level here down of it was a bottom of COVID of 36. I don't know if that's going to happen. It's so low. Yeah. They're chilling at a PE of 29. All right. The red level here, I do think is doable within the next 6 months, is chilling at 25. This was a company where the PE was in the hundreds. I remember that.
Yeah.
All right.
Oh, yeah. It
Oh
certainly
boy.
was. Yeah, for a while there, it was completely flat because they didn't make money for years.
Yeah.
And then they accelerated. They started actually being profitable, but their metrics were off the chart. You know, you're talking a PE like up in this triple digit territory. However, they've had absolutely tremendous growth. They've eaten Intel's lunch in terms of taking market share, and they've continued to do so. So that their revenue growth supports above market PE. They're still hanging out in this like kind of high 20s range, which I don't think is unreasonable given where they are in terms of their business cycle and their growth trajectory. That a P of 25 would probably be a very nice like entry point on AMD.
Yeah. I really like AMD in the 50s. I think it's nice. All right, last one. Nvidia. All right. So AMD's competitor, obviously. We broke down through this 153 level really just in the last month. We're already down to 125. Okay, so Nvidia at 125 is 41. They've always had a fairly high historical PE. I do think my dream level is very gettable here at 96. And I think that this red level, 113, which is going to be very strong. You can see we held up here, we held up here. It's a strong level. But that red is going to be 37, and that yellow is going to be a P of 31. All right?
Okay. So a P of 31 gets me a little bit more excited. They also have had pretty tremendous growth rates, and you're definitely seeing kind of push towards servers using GPUs, and Nvidia definitely has a product category leading product that I know, right? I just done it there, but I get that there's a real competitive moat for them. So paying an above market rate definitely makes sense to me. But their PE has always been pretty elevated. You're talking about 30s, 40s, 50s, all the way up to this ridiculousness here of like an 80 PE. They're growing very fast, but they deserve that. That's very questionable. Obviously, in hindsight, probably not. But even at a PE of 41, that's a little aggressive for me. I don't think I'd be a buyer until you're talking about a PE of 25 or 30, somewhere in that upper 20 range would be reasonable for me. You're also going to see a significant drop off in the earnings because the whole kind of crypto market is down, and they're largely dependent upon that for a portion of their revenue. The whole China blockade of chips is another kind of storyline with them. But
big cycle too. It's a very cyclical stock. All right. So
true.
we have Apple, Google, Meta, Microsoft, AMD, Nvidia. Buy two.
Buy two. I mean,
Which
I'm already
one?
buying Google and Meta, and I already own
Google and
enough
Meta are your
Apple.
choices?
Yeah,
If
those
you
are
had
the two
to
I'm
pick
buying.
two stocks of those to go all in on for the next 5 years, which two do you think are going to have the biggest increases within a 5-year time limit?
So Google would definitely be one. Which one is my number two? Ooh, that's kind of interesting. I'd
Doesn't
have to do
have
a
to
little
be a
more.
company you believe in for 10 years. Its biggest increase within 5.
I'd have to do more due diligence on the two CPU companies. Um, I am tempted to say Nvidia if it gets to the right price.
Okay. I'm Meta and AMD. Google's a close
Meta and
third.
AMD.
Yeah.
Okay, I like it.
Either way, guys, you play this right. You don't get loaded in bull markets. You get loaded in bear markets.
Yes,
You
I
play
love
bear
it.
markets correct. This is how you make money. You don't have to go all in at these prices. Screenshot those prices I just showed. Just buy a little bit of shares, right? You don't have to call the bottom. You're accumulating a position over the next year. Let's kill
Exactly.
it.
That's how you got to think about it. You got to start doing your own due diligence, come up with your numbers, and start buying as the stock starts hitting your number. That's what I've been doing.
All right, guys. Have a good one.
See you on the next one.